Kathy Kriskey, we've seen a noticeable drop in crypto Bitcoin prices over the past 2 months. What's driving the pullback?
A lot of it is general risk off, right? Concern about what the Fed is going to do, concern about Fed independence. But generally, it has hurt crypto more than some of the other markets. We've seen a massive move down. And that's the mistake that a lot of people are making, is that giving up on crypto, giving up on Bitcoin. So generally, we've seen about $1 trillion come out of the digital asset space, which is pretty crazy. But generally, we are saying to people, remain calm.
Well, the volatility can be intimidating. So aside from telling them to remain calm, things will be well, what else are you telling them heading into 2026?
So the volatility is only around 30%, and it has come down substantially due to the massive adoption into Bitcoin. And I thought it was really interesting. The Liberation Day, the Qs, our Invesco's main product, the Qs volatility was higher than our BTCO volatility. So I think remain calm, and then understand that you own a volatile asset, but don't give up on that volatile asset.
Well, you can always dollar cost average. That's a good way to do it. So talk about how you're counseling your clients to do something like dollar cost averaging.
I have to say, I've been very frustrated because I was traveling last week, and a lot of clients said, "Oh, Kathy, I got out." I was like, "You got out? What were you thinking?" So obviously, buy on the dips, dollar cost averaging. That is a fantastic technique in Bitcoin because there are opportunities. I believe we are in one of those opportunities. So people should be scaling in and buying as it trends down. But like you said, dollar cost averaging. I'm personally doing it, and I would suggest everybody watching this video buy on these dips.
And I'll assume you're advising them to dollar cost average into the BTCO ETF, your ETF. What's so great about yours as compared to the other Bitcoin ETFs out there?
We are the closest to the spot Bitcoin price. And I think that's key. People want, when they're buying these ETFs, they want to trade as closely to the spot Bitcoin. And it's for a few reasons. We partnered with Galaxy, and so we have great execution, whereas a lot of our peers, they have to use a third party like Coinbase Prime when they're buying their physical digital assets. So we have a huge advantage to that because that extra cost is passed on through performance, and ours is not. We share fees with Galaxy. So that's why I say to people, if you do your homework, you will buy BTCO instead of some of our peers.
And then finally, we kept hearing about a Solana ETF. That's something that people were expecting to buy. Will they be able to buy it in 2026?
Absolutely. And our product, QSOL, QSOL, again, this is a really interesting cryptocurrency because it's cheaper, faster, and more scalable. And remember, Paul Atkins, the head of the SEC, has said he wants to get all of these financial markets on chain. And the question is, which blockchain are going to be used for that? So with Galaxy, we believe Solana is going to win that race. So we are really excited about the Solana ETF. And I think that clients, with its higher vol, but just size your allocation accordingly. But we think that Solana is going to have a great future.
All right, well, thanks for coming on and talking about it.
Thank you.